everyone, welcome back to RUTAP and welcome to today's session. So in today's session we are going to discuss two very important news articles of finance. The first news article is regarding the Reserve Bank of India that has approved the surplus transfer of this much amount to the central government. So why this has happened, as well as what is the background regarding this news article, all of this we are going to discuss in today's session. And let me tell you that from both these news articles direct question can come in the phase 1 of the RBI Grade B examination as well as in the phase 2 of the RBI Grade B examination. Okay, so the second news article is regarding the campaign of the Reserve Bank of India, that is 100 days 100 pays campaign. So this is a very important campaign of the Reserve Bank of India which we are going to discuss in today's session. But now before moving forward, do subscribe to our YouTube channel and join our Telegram channel to get the PDF of this session. Okay, so you will get the PDF of this session in the Telegram channel of EduTap. So now coming to the first news article, that is regarding the meeting of the Central Board of Reserve Bank of India. So the 602nd meeting has happened of the Central Board of Reserve Bank of India under the chairmanship of Shri Shaktikanta Das, that is the Governor of the Reserve Bank of India. Okay, so now let's understand a little about the Central Board of RBI. So the Reserve Bank's affairs are governed by the Central Board of Directors, and the Central Board of Directors are appointed or nominated for a period of 4 years. So there are the official directors, that are the full-time directors, that is the governor, as well as 4 deputy governors. So the governor of the RBI is Shaktikanta Das. Okay, and there are the 4 deputy governors. So in total 5 members can be the full-time directors, and the non-official directors are nominated by the government. There are 10 directors from various fields and the 2 government officials, as well as there are other 4 directors, 1 each from the local boards, 4 local boards. So what you understood, that there are the 5 official directors, those are the full-time directors. They are 1 governor of the Reserve Bank of India and the others are the deputy governors. Now nominated by government, there are 10 directors and 2 government officials, and there are the 4 directors that are from the 4 local boards. So these are the names of the directors. Okay, so first you can see the governor, okay, and the 4 deputy governors. So these are the 5 full-time members. Then there are the 10 members that have been nominated by the government. Okay, these are the 10 governors that have been nominated by the government. So they are the non-official directors. Then from the local boards also there are 4 members, each from 1 local board. So from the western area there is 1 director, from eastern area there is 1 director, from northern area there is 1 director, and from the southern area there is 1 director. Okay, so these are the 1 each from 4 local boards. So this is the constitution of the Central Board of Reserve Bank of India. Now the functions of the local board: to advise the Central Board of the Reserve Bank of India on local matters regarding the western area, eastern area, southern area and northern area, and to represent the territorial and economic interest of the local, cooperative and indigenous banks, and to perform such other functions as delegated by the Central Board from time to time. So local boards are the boards that are representing the needs and the requirements of the local areas, and there are the 4 local boards, and from each local board there is 1 member that is chosen as the director that represents their local board in the Central Board of Reserve Bank of India. Okay, now coming to the news article again. So the meeting has happened, 602nd meeting of the Central Board of Directors of the Reserve Bank of India, held at Mumbai. In this there were major decisions that were taken. So the board in its meeting reviewed the global and domestic economic situation, the macroeconomic situation of the India, as well as the situation that is going on in the globe, and associated challenges, that is including the impact of current global geopolitical developments. So there is the geopolitical tensions that are going on, there is the supply chain disruptions, and there are different disruptions that are coming in the global area, and due to those challenges there is the effect that is coming to India also. So associated challenges has been seen, including the impact of the current global geopolitical developments. So now the decision of the board also discussed the working of the Reserve Bank during the year April 2022 to March 2023 and approved the annual report. So I have told you that the annual report is going to come soon in May itself. It can come by the end of the May. Okay, so this annual report was also discussed in the meeting of the central board. So you can understand that this annual report is going to be released soon. Okay, so this will be the annual report that will be important from your exams point of view, because this is near to the examination. And accounts of the Reserve Bank for the accounting year 2022-23 was also discussed in the central board meeting. Now the decision that we are here to discuss about regarding the surplus. So this is the decision. So the central board has approved the transfer of rupees 87,416 crore as surplus to the central government for the accounting year 2022-23. So this much transfer the RBI is going to do to the government's account, we can say, and this is the surplus that the RBI is going to give to the government of India, because the RBI is under government of India. So from the profits of the RBI is going to give the dividend to the government of India, because the government of India, we can say, is the shareholder of the Reserve Bank of India in company's terms, or the RBI is under the government of India, while deciding to keep the contingency risk buffer at 6%. So this we are going to discuss in the coming slides. So first of all, why? Let's understand the background, that why RBI is giving the surplus funds or surplus transfer to the government of India. So the economic capital framework, this was released in 2014-15. It operationalized in 2015-2016. Okay, so it operationalized in 2015-2016, and the review of this economic capital framework happened in November 2018. So in November 2018, there was a committee that was formed by the Reserve Bank of India in consultation with the government of India. The committee was the Bimal Jalan committee. Okay, so this was the committee that was formed for the recommendation and the review of the economic capital framework. So in November 2018, Bimal Jalan committee was formed for the review of economic capital framework. Now this is the framework through which the methodology has been provided for the determining the appropriate level of the risk provisions that the Reserve Bank of India has to do with itself. So see, the banks maintain the provision. Banks maintain risk provision because when the banks are giving the loans, there is some risk attached. So for that risk, for catering that kind of risk, the provisions has to be maintained by the bank itself. Okay, so there is the provisions that the bank maintain against the risk that is associated with the loans. Similarly, the Reserve Bank of India is indulged in so many activities. The RBI is providing the loans to the banks. The RBI is also engaged in the foreign exchange reserves and everything. So there are the risk that is engaged. The RBI is also engaged in government securities. So there is the risk that is engaged with all these kind of things, and for that the provision has to be maintained by the RBI also. And so this framework, economic capital framework, this discusses about the risk provision as well as the profit distribution to be made, that how the profit should be distributed under the section 47 of the RBI Act 1934. So under section 47 of the RBI Act, there is the provision that after making provision for bad and doubtful debts, that is after keeping the risk provisions, after keeping the provisions for the bad assets and for the doubtful debts, depreciation in assets, for keeping the provision in the depreciation of assets also, contribution to staff, that is the salaries has to be given to the staff, and the superannuation funds, that is the retirement funds, we can say, that has to be given to the staff. So after deducting all the cost of the Reserve Bank of India and after deducting the provisions of the Reserve Bank of India, for all the other matters for which the provision is to be maintained, for deducting all of that, then what the balance has been left given to the government of India by the Reserve Bank of India. Okay, so the balance of the profits shall be paid to the central government. So I hope you have understood that after deducting all the cost, after deducting all the cost from the income of the RBI, from the income of the Reserve Bank of India, after deducting all the cost, the balance that is left, that is the profits that is left, has to be given to the central government. After the RBI has paid for the salaries, after the RBI has paid or kept the fund for the retirement funds, after the RBI has kept the provisions, the risk provisions, whatever is left after that, that has to be given to the central government as the profits or as the surplus. So at the end of fiscal year RBI transfer the surplus fund in the form of dividend. So it is in the form of dividend. The surplus fund is transferred to the Reserve Bank from the Reserve Bank of India to the Government of India. Okay, to the Government of India, the dividend is transferred as per the Economic Capital Framework. So Economic Capital Framework provides for the risk provisioning and provides the requirement or provides the rules for the profit distribution. So I hope you have understood this very clearly, adopted by its board. So Economic Capital Framework, this is the framework that came into effect from 2015-2016. So it was developed in 2014-15. It came into effect, it operationalized from 2015-16. In November 2018, the Bimal Jalan Committee gave the review, and all the recommendations of the Bimal Jalan Committee was accepted by the Reserve Bank of India. From then onwards, the Economic Capital Framework that has been come into effect, that is working. After the recommendations were accepted of the Bimal Jalan Committee, the ECF that is working is actually as per the recommendations of the Bimal Jalan Committee, and the ECF, it provides a methodology to calculate the risk provisions that has to be maintained by the Reserve Bank of India, and this tells about the profit distribution, that how the profit should be distributed. Okay, and under section 47 of the Reserve Bank of India, after deducting all the cost, whatever is left, that has to be given to the central government as the surplus or in the form of the dividend, we can say. Okay, I hope you have understood the whole of the background. So now the Reserve Bank approved 87,416 crore dividend payout to the central government for the 2022-23 fiscal year, nearly triple of what it paid in the previous year. So in previous year, the RBI paid to the central government the surplus of 30,307 crore, and it is now, in previous year 30,307 crore was paid to the, like in 2021-22, for this financial year, for this fiscal year, the payout, the surplus transfer to the Government of India from the Reserve Bank of India was 30,307 crore rupees. But in this year, like for the fiscal financial year 2022-23, the 87,416 crore of the surplus transfer is being made from the RBI to the Government of India. Now you can see it is 188%. For this financial year 2022-23, 188% higher fund transfer is happening, surplus transfer is happening to the Government of India. 188% higher the surplus transfer is happening from the Reserve Bank of India to Government of India. Okay, so now the union budget had expected a dividend of around 48. So the union budget had expected a dividend of around 48,000 rupees crore from both banks and RBI. So the public sector banks, they are under the Government of India, so they also pay surplus transfer, or they also pay the dividends. They also pay the dividends to the Government of India. So from the public sector banks and from the Reserve Bank of India, the Government of India was expecting only around rupees 48,000 crore from both banks and Reserve Bank of India. Now you can see that the central bank alone has comfortably overshot this figure owing to the higher earnings on the sale of forex. So why there is so much surplus transfer that is happening, or how the RBI was able to maintain such high profits, how RBI was able to come up with such high profits after paying out the cost from the income. So this was because of the higher earnings on sale of foreign exchange. So RBI was selling the dollars. RBI was selling the dollars to overcome the depreciation of the rupees, because rupees was getting depreciated, the value of rupees was decreasing and the value of dollars was increasing. So to overcome this increase in the value of dollars, the RBI supplied dollars. That means RBI sold dollars, because when the supply of something increases, the value start decreasing. So for that, the RBI was selling the foreign exchange, RBI was selling the dollars, and at that time the dollars value was quite high, and due to this also the RBI was able to earn a lot. Better returns on the foreign exchange investments in the US treasuries that has been maintained by the RBI, and the US dollar, the value was increasing a lot, and that's why the RBI was able to get a lot of returns from that. revaluation of foreign assets. So whatever the foreign exchange reserves that the RBI has. Now the foreign exchange assets or the reserves, even the gold, the value was increasing by a lot, and you can see that after the revaluation, when they were valuated again, when the valuation was done again, there was the increase in the valuation that was seen, and due to this there is the increase in the returns also, we can say. And this is the revaluation of foreign exchange assets, that we are not selling it but they have been revaluated, the assets have actually increased in value. Okay, and adjustments in reserves were also done. So due to all of this, there were higher returns that the RBI was able to get, and due to higher income, the RBI was able to pay higher also. So now coming to contingency risk buffer, that I said that the RBI has said that we will be maintaining 6% of the contingency risk buffer. So what does this mean? So deciding to keep, the RBI has decided to keep the contingency risk buffer at 6%, this 6% of the balance sheet of RBI. Okay. So the contingency risk buffer is a specific provision fund that is kept by the central bank. Okay, this is the provision fund that the central bank, that is the Reserve Bank of India, is keeping with itself for any unforeseen or unexpected situation that can come in the economy. Okay, so this provision fund, that is the contingency risk buffer, is kept by the Reserve Bank of India primarily to be able to use this fund during the unexpected and unforeseen contingency situation. That is, what if the securities value depreciate by a lot. So for in that situation, the RBI is losing. The RBI has expected to make profit, or the RBI has bought some securities, but now the value of those securities is depreciating. So the RBI has to maintain some buffer with itself. Okay, risk from the monetary rate policy changes, that now some bank has fallen down, or some bank is failing due to the monetary policy change that has happened, or there is some kind of situation that has come in the economy that the RBI needs a lot of money for the handling that kind of situation. Systemic risk to the system, the monetary system is facing some kind of risk. For that also the buffer is maintained. The central bank for a fiscal year has to keep the buffer fund of a 13% of its balance sheet. So you can understand that for now the RBI has thought of keeping 6% as the contingency risk buffer, and this 6% is the percentage of its balance sheet that the RBI has to keep with itself for the unforeseen situation. The risk provisioning made from economic capital to cover monetary, fiscal stability, credit and operational risk is cumulatively referred to as the contingent risk buffer. So this is the contingent risk buffer that has been maintained by the RBI at 6% of the balance sheet. This is for handling any kind of situation, any kind of unexpected situation that is coming in front of the Reserve Bank of India. Okay. So now coming to this is the additional information regarding the central bank capital and the surplus transfer. So the first committee that was made was Subramaniam Group in this regards, and it submitted the report in early 1997. This was followed by the Thorad committee that was formed in 2004, and its recommendations were not accepted. Then there came the Maligam committee in 2014. Then there came the economic capital framework that was developed by the RBI itself, and this was developed between 2014-15. This started working in 2015-16, and then there was the committee, that is the Bimal Jalan committee, that was formed. The chairman was Dr. Bimal Jalan, and this committee was formed in November 19, 2018, and this committee gave the recommendations regarding the existing economic capital framework. And then now the economic capital framework that we see, that talks about the risk provisions and that talk about the surplus transfer or the profit distribution. So this ECF that is currently working is as per the recommendations of the Bimal Jalan committee, and this committee has also recommended, and the RBI has accepted that recommendations, that the contingency risk buffer should be in between 5.5% to 6.5% of the balance sheet. So the contingency risk buffer has the area or has the range of 5.5% to 6.5%. Previously the RBI was keeping 5.5% contingency risk buffer, but now the RBI has increased the Now the RBI has increased the contingency risk buffer to 6% of the balance sheet. Okay, so now this was all that you needed to understand from this news article point of view. Now coming to the 100 days 100 pays, this is the campaign that has been announced by the Reserve Bank of India, and this is the campaign in which all the banks will have to trace and settle the top 100 unclaimed deposits. So there are many unclaimed deposits that come to the, in the bank there are many unclaimed deposits, such as, let's say some person has died and the person's nominee, the person has not given the nominee's name, or the nominee is living in some other country and the bank is not able to reach the nominee. So after the death of the person, the unclaimed deposit, the fixed deposit of that person or the recurring deposit of that person remains with the bank itself. The bank is not able to transfer it to the nominee, or there is no nominee that was given by the person itself. So in such cases there are unclaimed deposits, or sometimes what happens that you have so many bank accounts that you forget about one bank account. Okay, so due to that there are unclaimed deposits that left with the bank. So it has been said that this 100 days 100 pays is for the banks to trace and settle the top 100 unclaimed deposits of every bank in every district. So in every district, every bank has to settle top 100 unclaimed deposits, okay, of the country within 100 days, and this has to be done within 100 days, and that's why the name is 100 days 100 pays. So which are called unclaimed deposits, like you have not claimed your deposits for 2 months, so they will be called unclaimed deposits. It is not so. Balances in savings and current account which are not operated, if your saving account or current accounts are not operated for 10 years, or your term deposit, that is your fixed deposit, is not claimed within 10 years from the date of its maturity, then it will be called unclaimed deposits. Okay, so these amounts are transferred. Now the bank, does bank keep all the unclaimed deposits with itself? It is not so. The banks, after this period is over, the bank transfer the funds, the bank transfer the unclaimed deposits. These amounts are transferred by the banks to the Depositor Education and Awareness Fund that is maintained by the Reserve Bank of India. Okay, recently RBI announced that it is set to launch a website to enable the depositors to search across banks for possible unclaimed deposits, so that if a person has died and the nominee or the daughter or son of the person has to find the unclaimed deposit, or has to find that how many deposits my father or mother has done in which bank account. So the person will have to go to the website of each of the bank to find the name of his or her father or mother. Instead of doing so, the daughter or son, what the person can do, that just go to one portal of the Reserve Bank of India and just put the name of the person, of the mother or father, and other details, and the daughter or son will be able to get the information regarding the bank accounts and everything. Okay, so this is a kind of portal, this is a kind of website that the RBI is considering to develop and to bring. So the RBI announced that it is set to launch a website to enable the depositors search across banks. So the depositors will able to search across banks for possible unclaimed deposits based on the inputs from the users, the data that they are feeding in the website. They will be able to see the unclaimed deposits, and this is the definition of unclaimed deposits. Okay, so now Reserve Bank from time to time through its public awareness initiatives has been encouraging members of public to identify and approach the bank concerned for claiming such kind of deposits which are unclaimed deposits. Okay, and the RBI has thought, I have already told you that the banks display the list of unclaimed deposits on their website, but in order to improve the efficiency and widen the reach and access of the depositors or the beneficiaries to such data, the RBI has decided to develop a centralized portal, a web portal, through which what will happen, that it will be this web portal will enable search across multiple banks for possible unclaimed deposits based on user inputs. Okay, based on the user inputs, the users will be able to find the unclaimed deposits. Now coming to 100 days, 100 pays is for banks to trace and settle the top 100 unclaimed deposits of every bank in every district of the country within 100 days. Okay, so this measure will complement the ongoing efforts of the Reserve Bank of India in running the public awareness programs, in running different kind of campaigns, as well as the RBI is also thinking of bringing the centralized portal. So, and initiatives that the Reserve Bank is continuously doing to reduce the quantum of the unclaimed deposits in the banking system and return such deposits to their rightful owners or the claimants. Okay, the bank will commence the campaign from June 1st, 2023. So soon this campaign will be run. So this is the first question. I hope you will be easily able to answer this question, in which you have to tell about the definition of the unclaimed deposits. This is the second question, where you have to tell the name of the campaign. Now this is the third question. I hope you will be easily able to answer this question. You have to tell that what is the contingency risk buffer that the RBI has thought of maintaining now, and the limit is, or the range is 5.5% to 6.5%. So this is the range for the contingency risk buffer. So you have to tell that what is the percentage that the RBI has decided to keep for the contingency risk buffer. So thank you very much. Now before going, there is a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, and through this single guidebook you can get all your common queries answered. If you want to know about the examination, what is the pattern for the examination, what is the previous year cutoff for the examination, what is the syllabus for the examination, all these common queries can be answered through a single guidebook. You do not have to visit different links, you do not have to visit different websites. Even if you want to know about the preparation, the strategy and the sources for the preparation, all your common queries can be answered through this single guidebook. So do download this absolutely free guidebook that will save your efforts and your time. So do download this guidebook. The link is provided in the description box below. Thank you very much. And if you have any query, you can mail us here. You can contact us through this number, okay? Or you can mail us at hello@edutap.co.in. Okay, thank you very much everyone.